Yeah, all right. So the now former, after, so that it's actually collapsed quite a bit. So he was the third richest man, Gautam
Mm-hmm.
Adani, and his
Farmer.
companies was originally, yes, a family-owned business, but has since went public many, many years ago. The Adani Group, it's effectively seven core companies, which I'm going to be looking at, has been accused of fraud, amongst other things, by the short-selling group Hindenburg Research. So sometimes short selling research, they obviously have monetary, should I say,
Incentive.
incentives.
Yeah.
Thank you,
Yeah.
Brennan. I'm
Yep.
just forgetting words today. It was a long weekend. And
Yeah.
so you have to really question if the research is just sensational, or is it actually bound to some fundamentals, or is it fraud in this case? So you really want to look deeper than just it was fraud, it was this, blah, blah, blah. So the Indian-based group headed by Gautam Adani is comprised of seven core companies: Adani Enterprises, Adani Transmission, Adani Total Gas, Adani Green Energy, Adani Power, and Adani Ports, and Adani Wilmar, two of which are in India's Nifty 50 index, and six are in the MSCI India index. These are quite commonly used indexes. So if you own, let's say, an emerging fund or any India-based ETF or fund, there's a high probability that these companies are in them and you indirectly hold them. So there's your state on why you shouldn't always buy ETFs, because you can actually get these companies, even though they are a very small percentage. The couple I looked at, they were 0.2% of the ETFs, but you do still own them. So on the date of this report, which was released on January 24th, the Adani Group's, those seven companies, was valued at 218 billion US and has since fallen over 50% at the time of our recording to 106 billion. As short seller reports commonly do, and this report is no different, they provide a huge amount of reasons of why the company is overvalued, or in this case, fraudulent as well. Before we get to the fraud, Hindenburg first states the company are purely overvalued based on pricing valuation, which is what we do. We are inclined to agree with this as well, because as Aaron was actually saying in our previous segment, Brennan was saying in his previous segment that high earning multiples when you're looking past 100. In this case, a few of the companies were at 800 price to earning multiples. Yes, 800. Another one was at 300. Another one that was around 80, and so on. Like they're not cheap companies for the most part. And when you were comparing to the industry averages, what Hindenburg did, they were 80, 90+% overvalued on that one metric, as well as they cited liquidity concerns due to high debt. But let's look into some fraud, because really these overvalued companies, they're nothing unique. We go over them all the time, and we've seen them even quite recently with what Aaron was saying earlier. That's where Aaron was coming in on this with the tech companies over the past few years. So, and I'll link the full Hindenburg report as well as Adani's response. They are extremely long, I will say. So just a warning, the Adani response is over 400 pages, to give you an idea. First off, the biggest claim, I'm going to go over the bigger claims and the stronger ones that I saw, but there are many more, of course. So the first claim I'll go through is that Adani's group insider ownership is just too high. For India, a public company has to have a maximum of 50 or 75% insider ownership. Hindenburg claims that Adani is in excess of 75% using shell companies and or funds. In Mauritius, which is a tiny little island, well, no, I shouldn't say tiny, it's about 1.2 million population off the southeast coast of Africa, but it's a country that is commonly used as a tax haven. So it's not exactly surprising to see funds in this location, but it's surprising how many funds and how much ownership is within this country. So, and the issue with these funds is they almost exclusively own Adani companies. So they should be classified as what Hindenburg is saying as promoters or insiders, which will push the insider ownership past this legal threshold. And obviously, the issue is when you have this high of insider ownership, you can have stock price manipulation, and they can significantly impact liquidity. So if they're doing a raise, which is actually what they were doing and have now canceled, is you shoot up the valuation by buying up the stock because it's on very low liquidity. And then right after it's issued, you can take it back down and reclaim your money, but you sold at a higher value. And this is contrary to what we'll commonly say is we like insider ownership, but this is just too high. We want to see a bit of insider ownership, but not obviously this high or illegal ownership in this alleged case, I will say. So Adani's response, their 413-page response is they're not related to these companies. they have nothing to do with them, so they're not going to comment on it. That's their response. So it's a pretty weak response, in my opinion. Second point I'll go over is Hindenburg accuses Vinod Adani, Gautam Adani's brother, of heading a shell company structure, so multiple shell companies, to obscure inflow and outflow of capital into Adani Group, allowing the Adani Group to boost reported earnings as well as move money around as they need. So if they need money for a fund, they can move it out of one into another. And these companies really shouldn't be doing this. This is illegal. I don't know the Indian regulations well, but I'm going to assume it's illegal. But I know it is in Canada to do it under this function. So they'll use this another method is they're using it to actually extract funds into the Adani family, private-owned funds and firms, so these shell companies, and then use that to produce wealth for themselves, pretty much. Adani's response is they were at arm's length, so that means they were legal to do, but obviously Hindenburg disagrees, and they claim that these were done at fair value, which is what you're meant to do for these related firms transactions, but you are allowed to operate within your own group's company structure, and you are allowed to do transactions with one another, but they have to be at fair value. They have to be reasonable, especially when you're dealing with public companies. But the claim obviously is they're not, and Adani just dismisses and say, hey, we don't have control of these private companies. It's not our business. The third major point I'll go through is in connection to the Indian government and taxpayers' funds. The group has been accused of import-export scams multiple times, and they've been through the court systems. Hindenburg cited 4 cases, of which the group would inflate values of exports to obtain tax credits in one of these cases from hitting export quota. So they inflate, let's say they're exporting iron ore, which is what the enterprise, Adani Enterprises does, is they export, let's say, what would be a fair value of $70 per ton of iron ore, whatever it happens to be, up to 100. There you go. You hit your export quota and you're getting some tax credits back, as well as citing multiple cases where they have been accused and have been in the court system for paying bribes to multiple levels of government to illegally export items. The Adani's group response is this was settled in court and they were found to be false, so more dismissive. There have been since some protests calling for action of state investments into the Adani Group, so there has been some state funds, well, Indian state, I should say, funds into the Adani Group, and since as well there's been circuit limits imposed, so that's how much the stock can go up or down. If you look at some of the stocks, you'll just see it's a flat line all day. It is actually trading, it's not halted. It's just no one wants to buy for more than that value. So it just dries up liquidity, and it was first 20%, then 10%, and it's now 5% for some of these companies, and it's just a flat line for some of the days, and it's actually quite interesting. But yeah, I'll open up if you guys had any comments.
I was just doing a little bit of research on Hindenburg Research, so I'm not familiar with the short selling company myself. I do know that we've seen various periods of the market in the past where there seems to be a lot of short selling activity, and generally what I've seen in the past is these short selling companies come out, some of them known, some of them fairly unknown, and they put together these huge reports, many of which look like they're put together by children. You'll see cartoons, you'll see like a lot of claims that are just non-falsifiable, and the idea is that you create a scare, drive the stock price down, and then they cover their short, they make money. So we've seen this in the past. I didn't read through the whole Hindenburg report. I didn't get that impression. I mean, it didn't look to me like it was, some of the reports that I've seen were just kind of laughable from the perspective of an analyst, reports I've seen in the past. From what I just looked at in the Hindenburg report, it looked like it was professionally written. That doesn't necessarily mean that it's right. Just like the reports that look like they're unprofessionally written aren't necessarily wrong. So one thing that I did notice is that Hindenburg Research, one of the other big companies that they went after, was a company called Nikola, which was they were doing electric vehicles. I believe they were doing electric trucks. And this is a company that really popped out to me years ago before the short report, because they had a market cap of many, like tens of billions of dollars. I can't remember exactly what it was, but they had zero revenue. So this reminded me of like a full tech bubble style company. Even in the recent boom in the tech market we saw, where I'm talking about companies trading at 100 times revenue, they still had revenue, right? Whereas, I remember looking at Nikola and thinking, I want to say that it was a 60 billion market cap company at one point with no revenue, but that seemed absolutely insane to me. So that's one of the companies that this Hindenburg went after. I don't know much about them. I was never going to invest in any of these companies. I think that they're talking about in this short report anyways, but I feel I see less of that short selling activity than I have in the past, but when it does come, it creates a scare. Ron?
Yeah, I think in this specific case, it was for this company, it's probably a good bet. Mm-hmm. And then like Brett pointed out, the scenario, essentially you have a company trading, and the group of companies trading at huge, massive valuations. They're funded by, I think, $30 billion approximately in debt. That's one of the most indebted groups or companies in mm-hmm. India. And this is, again, at the time when debt servicing costs have risen significantly. If you can impact a company's ability to access funding in some way, you inhibit growth with less growth, not so fast. Multiples will shrink over time. So even if the fraud alleged is false, it's a decent bet on a company that was probably, or a group of companies that was really quite overvalued. So, if you're going to pick a company, pick that lineup in that scenario, even if you're completely false on all the allegations, which may or may
very
not
complicated entity as well, right? Just so many moving parts. Yeah. It's hard to know.
Oh, it's great when you have that for these type of reports, right?
For sure. But I've seen short reports come out on companies, and they've turned out to be absolutely true. I've seen other ones that were just fishing expeditions, right? So,
well, some you're looking for an initial pop downwards, take your money and go out. That's probably not the firms that I would follow. If you're actually trying to root out fraud, and you found it, it is part of the market that. You can have somebody digging out fraud. Why not have that? Mm-hmm. If fraud is discovered.
Oh, absolutely. If they're actually doing good quality research and then making money off a short, I think that's great. A lot of the shorting companies that I've seen in the past are not doing quality research. Some of them sure are.
No, that's
a public service.
On either side, if you're doing good quality research, mm-hmm. it's good for the markets. Yep. If you're not, you're part of the problem. So.
That's the thing with a short report, like making sure that you are seeing the company behind the short report, who's actually issuing the report itself, because that's the thing with the internet in this day and age, is anybody could go out there and write or publish any kind of report,
and that's happened where it's and it does look like anonymous sources.
Exactly, completely
with Hindenburg
anonymous.
We know the founder.
Exactly, it's not an anonymous.
The people.
I know very little about the company. I can say that I agree. Certainly on their report on Nikola. I don't know why that even needs a short report, but I would 100% agree with them on that.
You think there should have been more during the bubble up, that we just saw in the markets, because if you're trying to root out fraud, it's not necessarily that some of those companies are fraud, but that's where you say, are many of them looking for just overvalued situations? Mm-hmm. Because there were certainly. It should have been a kid in a candy store a year ago.
But shorting's a different game.
Again,
it's different.
Both sides of the. If you're doing good research, either way, it's helpful to the markets. So that's what we would say on that. We'll see if this ends up being true, but certainly a good target to go after if you're hedging that way at this point.